There are some critical facts baby boomers need to be aware of in terms of what Social Security is, some of the rules changes, so that they can make sure they maximize their income when it comes to Social Security when it's time for them to make claim. In this video, I will share with you 5 important facts baby boomers need to be aware of so that they don't make the mistakes that could potentially cost them thousands of dollars in their retirement. Hi, I'm Mark Singer. If you're interested in timely and up-to-date information on retirement or Social Security, make sure that you subscribe to our channel and hit the notifications bell below to make sure that you're alerted to when we post new videos. So let me get right to my screen to share with you some of the lessons of the day. Now, there is an awful lot of coverage, media, otherwise, on the fact that Social Security is going bankrupt. Let me assure you that Social Security is not going bankrupt. Let me share with you some of the numbers. The OASDI Trust Fund is still growing. And by the way, do you know what OASDI stands for? Should be updated, I think, because it stands for Old Age Survivor and Disability Insurance Program. In any way, at the end of 2017, there was almost $2.9 trillion in the fund. And by the end, a year later, last year, it was still at the same basic amount. So the amount of incoming money and outflowing money was basically even. But as you can see in this slide, and what the headlines seem to take into account, is that the long-term projections are that without any reform, the benefits fall to about 79% of what is expected or quote-unquote promised today in 2034. So what would it take to restore the system to solvency? Number of reforms are being proposed and studied. Could increase the maximum earnings subject to Social Security tax. You could raise the normal retirement age, currently for 66 for those individuals born between 1943 and 54, 67 for those born in 1960 or later. You could lower benefits for future retirees, taking a look at different escalations and indexes. You could also reduce the cost of living, the COLAs for all retirees, and really be more in line with what the traditional pension had offered, which is just a fixed income with no cost of living increase. The bottom line for baby boomers is your benefits are not likely to be affected by Social Security reform. It is too important. Congress is going to get to it. Sometimes it takes a little longer than usual, or than it should, but we will get to it, and I do believe that we will be all set. Fact number 2, nobody wants to reduce your benefits. As I said in the previous section, Social Security isn't sustainable in its current form, and the trust fund is expected to be depleted by 2034, or so they say. So it's fair to assume that something will be done to either increase the amount of money flowing into Social Security or to reduce the benefits flowing out. However, it's important to be aware that there has been no serious effort from either side of the political spectrum to reduce baby boomers' Social Security benefits. Even most Republicans generally want to preserve Social Security for current retirees and Americans close to retirement age, which is typically defined as 50 or older. Not only that, but benefit reductions of any kind are extremely unpopular among Americans. In fact, 77% of Americans wouldn't mind a tax increase if it preserved Social Security. So this is the most likely type of Social Security reform that will ultimately gain political traction. One of the most popular Social Security strategies used by married couples is the file and suspend strategy, or unfortunately for many has been eliminated in 2016. Under this strategy, a worker could file for their own Social Security benefits at their normal retirement age, then immediately suspend them in order to let them continue to grow. Meanwhile, their spouse could collect a spousal benefit on the primary earner's work record, since technically the condition was that the primary worker filed for benefits. The primary worker could then restate the suspended benefits at age 70 or sooner at a permanently higher rate, even though a spousal benefit had been paid all along. Now, this is no longer an option. Benefit suspension is still available, but no benefits can be paid out on the work record of an individual who is not actively receiving benefits. This is called the restricted application, and we have an entire video designed to talk a little bit more about what the restricted application is. You can click on the link below to learn more. There is a lot to know, and if you're really interested in getting a little bit more understanding, a little bit more of a comprehensive view, it may take a little bit longer to look at. You can click on the link below entitled Become My Client. We'll give you a full-blown look at how we look at the process, how we interact with our clients, how you can learn more about how to avoid some of the landmines, and in that way you can learn more about the entire planning strategy and how to maximize your income. So let's return to our lesson today and continue with going to my screen. Another major loophole that has been closed recently is known as deemed filing. In years past, an individual could choose to file for just a spousal benefit while allowing their own retirement benefit to keep growing. Now, if you apply for one type of Social Security retirement benefit, you'll be deemed to have applied for both, and the higher of the two will be automatically paid out. For example, if you claim a spousal benefit at age 62, you'll also be filing for your own benefit at the same time. So be sure to take this into consideration so you don't inadvertently have your retirement benefit permanently reduced. Unlike the file and suspend loophole closure, if you turn 62 on or before January 1st, 2016, you are grandfathered in. You do have the ability to file for a spousal benefit while not simultaneously applying for your own retirement benefit. So here we go to fact number 5 and the last one today, which is to know how to maximize your benefits. So let's take a quick look at how your benefits are calculated. At age 62, each year's earnings are tallied up and indexed for inflation. They take the highest 35 years, the AIME, and the AIME is divided by 3 bend points. Don't worry about the formula. And it comes up with what the amount you will get, the PIA, the primary insurance amount, will be at your full retirement age. So let me give you a quick example. If you are a baby boomer born in 1957, you did max out, you have been earning since the age of 22, your PIA, or the amount the worker will receive at full retirement age, is $3,030.50. Here is a definition of what full retirement age is. If you were born between 1943 and 1954, your full retirement age, or FRA, is 66. If you were born after 1960, it's 67, and anything in between is prorated. So for me, I was born in 1955, so my full retirement age is 66 years and 2 months. So when you take a look at how to estimate your Social Security benefits, you can go take a look at your Social Security statement. The Social Security Administration sends out now for those who are over 60 and yet to have claimed. They will send a hard copy statement, or you can go on to socialsecurity.gov/my statement. Let me talk to you for a moment about my statement. If you have not gone on and staked a claim to your own Social Security, which is going on and signing up for my statement, it is very important, if there's nothing else you learned today, do that now or as soon as this video is over. If you go on and claim a stake to your Social Security number by claiming your My Statement account, you will reduce significantly the ability for others to hack into your Social Security number, and you'll also find out if anybody has already made a claim to or on your Social Security benefit. So even if you're not ready for Social Security, do please sign up for my statement. You can also go on to socialsecurity.gov and estimate your retirement benefits. Remember, however, their calculators do not bring into account inflation. We do have 7 different calculators depending upon the scenarios that do bring on what we use a 2.6% inflation rate, which is what the Social Security trustees assume looking forward will be the inflation rate. So it's important to understand the difference between whether or not you use or don't use the inflation rate and which calculators to use. There's a lot. Believe it or not, there's 567 different claiming strategies for Social Security, so it can be very confusing. If you're interested in learning more about how to create a customized income plan for you, how to maximize your retirement and Social Security income, click on the link below to become my client, and we'll share with you what our process is and how we interact with our clients. If you enjoyed this video, please subscribe to our channel and tell your friends. Thank you very much for watching, and I certainly do hope that you enjoy the retirement journey.